Discovery is a financial services company operating in the health and wellness industry, and it's soon to go into the financial services industry. Began in 1992 as a medical aid administrator.
But now it's got the full range of things, including a short-term insurer. But I don't know. I mean, it's got lots of irons in the fire. The UK, China, that's probably where it's mostly valuable.
And it has a market cap here on Discovery of 87.1 billion rand, a PE of 22.3, dividend yield of 1.3%. So significantly lower than the other players that we've spoken about in terms of dividend yield.
Yes, so less mature, faster growing business, retaining more capital, needing more capital to grow because it's justified putting it into the business to support the capital requirements for that rapid growth. Been very innovative from that medical scheme administration base, really becoming a fully fledged, I suppose you would say, global financial services firm, but with a clever kick to it, a clever spin, and that vitality reward for healthy living, really, and healthy existence, not only living, is really trying to be the beachhead into these overseas markets with, I would say, good level of success.
Share price graph gives us a sense that Discovery has sort of held its own since its results, interim results came out earlier
not so
this
long
year.
ago. I mean, it's drifted around at that 130 odd rands a share level for a while. I think we're waiting to see what kind of juice can flow from these global operations. I think the UK is a bit of a concern, but the Chinese operation is, for me, the most interesting because I want to see just how big that can be, because that is a great combination of a medical aid and a life insurer relationship with Ping An.
And it's really their partners are this shared value concept that they go on about at the annual results, interim result period.
Very much so. So you're rewarded for healthy living. So in the short-term side, if you drive better, lower premiums, life insurance, if you a higher vitality status member, lower premiums because the underwriting results are better. So it's really a shared value model with the consumer and has a lot of legs. You mentioned Brexit earlier in the show. Discovery was quite badly hit by Brexit because they bought the Prudential business pre-Brexit, and the uptick in the interest rates as a result of Brexit really hit the actuarial valuation of Prudential and has and still, I think to a certain extent, is causing a drag on the Discovery share price.
But this one again, what if we talk about the bottom draw? Yes, we'll talk about the bank, but the bottom draw element is that the growth potential here.
And the technology smarts are really what it's all about. The fact that they can do all of that stuff, like work out when you buy an Archie's at the store that you deserve some kind of a reward. That's incredible.
Well, look, they changed my behavior.
No more chocolates.
No more chocolates, running many Ks on a daily basis.
Yeah, so it's
the bank.
The bank, yes. What about the bank? Is that going to work?
Can it take that approach to business and translate it to a transactional banking business and give you lower interest rates, perhaps for better credit risk? Essentially, that's really what it comes down to, with innovation. And I believe it can. It successfully has entered new markets and innovated. Not scared to take big bets. Really put a lot of capital in, and they most probably will do the same. For innovation and a future-proof type of business, Discovery is an investment.
Hot.
I'm hot on
Paul?
this one.
Yep, hot for me. I hurled it and certainly think it's one of the best companies available.